Welcome back. Let's keep it with the earnings calls that are keeping us busy really this morning. Tata Power is in focus now. The company has come in with a Q4 performance, which more or less is in line with street estimates. Revenue and profit has expanded, but margin has come in below estimates. Let's go forward and discuss this with Mr. Praveer Sinha, MD and CEO of Tata Power. Mr. Sinha, good morning. Great to have you on. Thanks for joining in. So let's talk about, how you're looking at FY25. Of course, we know about the big capex outlay you're doing and all the capacity addition on the renewable side. But purely in terms of, business momentum, volumes, even on thermal, and the way you're expecting, the newly approved tariff norms from CERC, how will you expect that to play out over the business over the course of this year?
Good morning. Thank you for having me on your show. I think our narrative has always been that we have been doing consistent performance. This is the 18th consecutive quarter where we have shown a growth in profit. And this is on back of very solid foundation that the company has set in all our existing businesses. And it is only improving every quarter. We have seen our generation business doing exceedingly well in last 4 years. All of them are operating at full capacity, and whatever is the demand of power in the country, it is able to cater to that. Transmission and distribution, especially Odisha Discoms, have overcome the initial challenges. It has been making profit right from day one, but many of the cleaning up that had to be done in terms of the billing and collection has been completed, and you will see substantial improvement in profit going forward. Our renewable business, again, is coming to age in terms of the capacity adds that will happen. We've got very good orders, and we have nearly 5.5 gigawatt of commissioning that will happen in next 12 to 24 months. Some may spill over a little more, but most of them will get completed in 24 months. And then the manufacturing plant, which we have set up for 4 gigawatt of module and cell. The module plant is already operational. Cell will become operational next month. So the benefit of the module plant, both for internal usage in our projects as well as for sale, we'll start seeing from FY25 onwards. So I think all in all, very strong fundamentals. We will only be improving going forward, and you will always see that Tata Power continues to improve its previous year's performance as well as the previous quarter performance.
All right. Hi, Mr. Sinha. Good morning and good to see you. But there's a staff paper that's inviting feedback on capping of variable cost. First of all, do you have excess capacity that you'll sell in the open market? And any kind of analysis that you could give us?
Well, we have very small quantity of, it's not even 5% of our total generation, which is merchant. But that also we enter into medium-term arrangements. We do not have any excess power as such. So to that extent, we really don't get impacted by the excess capacity or merchant power sale that will happen from our side. Ours are all long-term PPAs, and these are on take or pay obligations. So we continue to get regulated returns on all our investments.
So just speaking about regulation, I believe, of course, Section 11 is still in force, and Mundra would be operating under that. So if you could just tell us how that's playing out. And also beyond Section 11, are there any negotiations for any fresh PPAs for Mundra?
So Section 11, which was till 30th June, has been extended to till 15th October. And as we see that the plant gets scheduled fully and is supplying to all the beneficiaries. So what we find is that even under Section 11, it is in merit order. And the cost of power at which the beneficiaries are taking is much lower than the cost at which they are procuring from others. So we do expect that something like Section 11 will become benchmark going forward for any discussion, any supplementary PPA that happens. And we are confident that the Mundra plant will continue to be very cost efficient and will continue to supply power to all the beneficiaries.
Okay, speaking of generation, in overall in your portfolio, what is the average PLFs at which you've been operating in Q4? And now we're in the summer months, peak summer months. So what are the average PLFs that you're expecting as we get into the peak few weeks?
We normally do the average availability. So our average availability is something like 95% for all our generating plants, whether they be coal-based or hydro plants. For our renewable, of course, the average availability is 99.9 for solar and 99% for wind projects. So I think our plants are running very, very efficiently, and we have adequate quantity of coal and all the other resources required to operate these plants. And we get virtually scheduled everything that we produce. So our PLFs also are very, very high to that extent.
Sir, we leave it there. It's a pleasure having you with us here. Thank you very much for your time. Appreciate it here on CNBC TV 18 very much. That's Tata Power Management with that perspective. The market